Hello guys, and welcome to another weekly news video. I am Styliana Charalambous, the head of investments and market research at Pure Fintech, and in today's video we're going to sum up the previous week's highlights and see how the market reacted on the news. Moreover, we will have a look on the major economic events of the current week. European stocks tumbled on Monday after an escalation in economic sanctions against Russia, and Putin's nuclear threats fueled market uncertainty and sent the ruble crashing and oil prices higher. The FTSE 100 opened 1% lower as UK Chancellor Rishi Sunak announced that UK was imposing financial sanctions on the Central Bank of Russia on Monday. Over the weekend, the UK, the European Union, the US and Canada agreed to cut off some Russian banks from the SWIFT network, a global payment system that connects international banks and facilitates cross-border financial transfers. Russia's central bank is also being cut off and blocked from deploying its international reserves. In response, Russian President Vladimir Putin ordered his country's deterrence forces, which includes nuclear arms, to be put on high alert. Elsewhere in Europe, France's CAC was down 2.1% after the opening bell, and the DAX lost 1.9% in Germany. The growing tensions has pushed oil prices above $100 after the commodity pulled back from session highs on Friday amid hopes of talks between Russia and Ukraine. Futures for the S&P 500 dropped by 3%. Futures for the Nasdaq 100 index declined by 1.9%, pointing to the equity gauge's first bear market since March 2020. US benchmarks closed the week higher on Friday after a rebound in global stocks. Wall Street's S&P 500 rose 95 points or 2.2% to 4,384. The tech-heavy Nasdaq increased over 1.6% and the Dow Jones edged by 2.5% higher. Now guys, let's see what will happen this week in the financial markets and what are the most important news of the current week. Markets will inevitably be dominated by the Ukraine crisis, though from an economic data perspective, worldwide manufacturing and services PMIs will be released, with the first trading week of March also bringing the latest US labor market reports. Worldwide manufacturing, services and composite PMIs will be released in the coming week for a look into how global economies had faced amid varying degrees of COVID-19 Omicron variant disruptions. Flash PMIs have indicated that developed world growth had broadly rebounded in February as the Omicron wave subsided. The Eurozone notably saw prices rising at a record rate, a trend to similarly track for other economies, adding pressure for more aggressive central bank policy tightening around the world. This week we have also the US labor market report. February US non-farm payrolls, unemployment rate and average hourly earning figures will be released on Friday to provide a first look into the US labor market conditions as the economy rebounds from the Omicron wave. The current consensus points to a 388,000 non-farm payroll gain. That's all the news for the current week, guys. That's also what happened in the markets in the previous week. If you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. Thank you for watching, and let us all pray for a better and peaceful world.